How to use a buy, refurbish, refinance spreadsheet. The fear of losing money is the #1 factor that stops people getting into property. Discover right now how to stay on the right side of the figures and invest. My name is Ryan from Luke Holmes Academy, teaching property entrepreneurs just like yourself how to invest in property fast. Firstly, let's understand BRR and how it works. So for me, this strategy is one of the biggest parts of my portfolio. We're doing it day in, day out. We're out there viewing all the time, and it's a hugely powerful strategy for building net wealth. Now, in brief, BRR stands for buy, refurbish, refinance, rent. So what we're going to do, we're going to buy a property below market value. So typically we're looking for 15 to 25% below market value. If we don't get the property below market value, the money gets stuck. So this is one of the key things that we have to be doing, and this is why we analyze the deals on the spreadsheet. This is why we have to know what the numbers are and how they all play out. And it's vitally important that you know how to do your due diligence on these type of deals, because if you don't and you get it wrong, it could be the end of your property journey right there. The refurbished side of it is obviously the added value that we're going to add. So we have to be able to add value to the property to be able to get the uplift on the mortgage. So, if we're buying a property at 50 grand and we spend 10 grand on it, it might be worth 85, then great, we're going to prove that we've added that value on and we're going to get that uplift. Now, don't get me wrong, you can just buy, quite well done out properties at below market value. Maybe someone getting divorced, or there's an emergency cropped up, maybe they're moving abroad and they just need to get out that property. You might be able to pick it up and it might be in a good condition. So but typically most of the stuff that I buy, we need refurbs. That's the stuff we're looking for. That's the stuff that gets below market value. Acceptances, it's quite difficult. Most people will pay market value for a done up property, and so most done up properties will get market value. So these are the type of properties you do need to be going for, and that you will eventually pick up, add them to your portfolio and run this strategy. So we've got buy, we've got refurbish, and then we've got the refinance part of it. So we're going to refinance it once the refurbishment's done, and then ultimately we're going to rent that property out and start getting it to cash flow. Now the quicker we can do all this, the better for us. It means we can acquire more assets onto our books, and ultimately it means we can get more rent into our bank account each month, because most of the stuff that we're doing this for, most of the time we're doing this for, is for cash flow. We want more and more monthly cash flow every single month. So the quicker we can get these projects done, the better. Now, let's just take a quick look at exactly how the numbers would play out on these type of deals. So I'm going to just use it in simple terms. Say there was a property worth £100,000. Now that's done up market value, so the market value property is £100,000. Now we want to be buying a property, say £70,000. Obviously that's 30% below market value. Now these deals do exist, okay? They do exist, but I'm just going to explain the numbers in layman's terms here so we fully understand how the strategy works, and then we're going to jump over onto the deal analyzer that I've got set up, and I'm going to show you why it's really important to have a spreadsheet that crunches these numbers out, not only to save time, but to make sure you stay totally non-emotional from these investments, and that it's totally about the numbers. The minute you start getting emotional in investments, the minute you start trying to tweak the figures to make them work, is the minute that your property journey starts to grind to a halt. So we might have a £10,000 refurb on this, and therefore it's 20% below market value that we've then acquired that property for. So we've got the 70 plus the 10. Now you probably have, including stamp and stuff and solicitor's fees, let's assume you've got another 3.5 grand's worth of fees, which then knocks this down to about 16.5 to 17% below market value. Now, once it's refurbished, what we're then going to do is we're going to get a mortgage on the £100,000. Now the £100,000 mortgage at 75% loan to value, which most lenders are putting out these days, is £75,000. We'd pay off the original borrowing, which was £70,000, and you can see there we've probably spent £13,500 on top of that. So in total, we're going to have £7,500 stuck in that deal. which isn't a bad deal. You know, if we're going to get £300-400 worth of rent out of it each month, that means in less than 2 years we're going to have all the money back out of those deals. Now, everyone's striving for the full money out deals or the cashback deals, but in my experience, they're very hard to come by. They do happen, you know, they do happen, but you've got to accept that you will leave some money in quite a few of your deals, but it's all about leaving the minimal amount of money in as possible to be able to then move forward on your next deal. You know, if you've got a pot of money, you want to be able to then put it into the next property, put it into the next property. Ultimately, it's going to drip down slightly as you keep leaving bits and bobs in, but then it gets topped up by the rent. You know, the rent's going to keep pushing it back up and up and up. So, you know, it's hugely important that you invest on the numbers. It really, really is. So what I want to do now is I'm going to just switch onto my laptop here, and I'm just going to show you how I use my deal analyzer, how I use a complex spreadsheet, pump some numbers into it, and it then ultimately spits out whether it's a good buy or a bad buy and whether we should be investing or not. So let's dive over to the computer. Okay, so here we are. This is my deal analyzer, as I call it. It's quite a complex spreadsheet, as you can see, but it simplifies a lot for me. It's been built over the years, but it's served me very, very well. So let's just take a dive in. I'll just zoom in here so we can kind of see what's going on. So in essence, this also works as a bit of a CRM system or a follow-up tool. So, you know, by putting in all the details of the agents and the properties and the postcodes, what it was advertised for, and the website links, we can always go back to these deals, because not every deal is going to come off first time around. So we do have to be going back to these estate agents, going back to vendors, going back to landlords if it's rental deals, just to make these get the follow-up, keep the pipeline full, and just keep checking in. You know, 1 in 3 property deals falls through, so just because you don't get it doesn't mean that you might not ever buy it. So in brief, what we do is I just fill in the grey columns. So we'll just kind of use the example that we kind of had on the whiteboard there. So we've got 70 grand purchase price. You can see there to automatically put the stamp duty in. We'll go £1,000 legal fees. I think we had a £10,000 refurb cost. I've got no sourcing fee, broker fee 145. This is going to fund it through a mortgage, but there's also the option here to fund it through a bridging, with a bridging calculator that I've all set up there. So, and as you can see, it starts spitting the figures out. But just to keep things simple, whether you fund it as a bridging or, you know, let's just put this 30% deposit, which is a typical bridging loan deposit. So you would need £21,000 deposit, and then you'd bridge the £49,000. They're obviously arrangement fees, etc. On a bridging loan, you would pay a bit more than that, and you'd also have a bit more legal fees, as you typically have to pay for the bridging loans legal fees. But again, we're just keeping this simple here. Rent, let's assume it was £500 a month rent. I personally don't use letting agents. I've got my own in-house lettings team. But if you were, let's just say they were going to charge you 10% of the rent each month, and then let's say your insurance was £15 a month. So 289 is going to be how much you're going to earn from this property each month. New market value, we said, was £100,000 done up. So you can start to see it starts to populate the figures. And as you can see here, it's now giving us a discount, including all the fees, of 16%. So ideally, we're looking for 15 to 25 or more, but you know, it'll tell you whether the deal will play out or not. So it also has a flip viability calculator if you just want to flip that deal straight on, and it tells you exactly what you can do there. And then it's got your total investment costs, your monthly cash flow, and this is if we weren't going to refinance at what your yields would be. Now, if you are going to refinance, obviously there's a few more costs involved. So we've got total investment cost. Now you'll see here for me these two arrows are red. Now I'm looking for 2 greens here. So basically what's wrong here is that it's going to take me more than 36 months to get my cash flow out, which is my golden rule, and it's refinancing monthly cash flow is less than £250 a month. So for the sake of keeping the calculator going, I'm just going to bump this up slightly and show you. I'm also going to get rid of the lettings fee because I don't use them. So you'll start to see there we've now achieved the £250 or more per month from the property. So that's gone green, and this should have gone green, but it's gone clear. But all in all, it's not red, and you can see because now it's below the 36 month mark. So cash out from refinancing. So we're going to invest 37,750. We're going to get 26 grand back out.
and the stress test monthly payment is 498. So that's going to make sure that keeps you on the right side of the mortgage lenders, make sure that you will get a mortgage on this property. And it's quite easy to forget those things, you know, stress test payments. So money left in the deal, 9.5 grand, a bit more than I would like, in all honesty. I like to leave no more than probably 6 or 7 in most of our deals, but 9.5 grand, I'm going to get the money back in 28 months, and the return on the investment is 11%. So, you know, all in all, not the worst deal in the world, not the best deal in the world, but something worth investing in. And that's how I quickly analyze a deal to say, if those two lights go green, I'll buy the deal, you know. And as long as the due diligence is being done to make sure that the refurb cost is spot on, and it's going to be, you know, no more than 10 grand, and to make sure that we've got the rent right, and make sure that we've got the uplifted. This column here is the most important column. You can fudge this as much as you want. You know, I could set that at 110,000. I could find a figure on Rightmove that stated to 110, and all of a sudden I'm like, whoa, what a deal that's going to be, 2 grand left in. But the reality is, you know, your data's, you know, this sheet is only as good as the figures that you put in. I like to be realistic. I actually more than likely go under the market. So I would probably, if that was genuinely showing £100,000 on the comparables, I'd want to run the numbers at 95 and just see exactly where we came out. And then I'd base my offer based on that. So I might have to pop my offer down, get us back in the ballpark, and get us back into the green lights. So very simple system. You know, we can add in the research here, so it gives us the average of all the various guides there. And, you know, as I said, if you want to do bridging calculators, it's there as well. I've also got lease options set up on here, so we can do lease options. And then it also runs it in terms of an SA analysis. It shows us exactly what the profit would be. So we can then filter the exit strategy through and have a look at, you know, how much we're going to rent it for, what the seasonal trends are going to be, etc., etc. If it was a HMO, the same, and then ultimately we have, you know, the comparables dashboard, which shows us the most profit. But BRR is what we're talking about today, and this is how I calculate my BRRs. This is my spreadsheet that I use. You know, you need a spreadsheet, you know, whether it's just to help you follow up and keep track of everything, but also to remove the emotion and make sure you're on the right side of the numbers. You know, make sure once you've set this up, it's there. You know, I've had this for many years now. I've tweaked it along the way, don't get me wrong, but, you know, it serves me very well. It serves all my staff well, all my sources well, you know, and all the mentees using this, you know, find it absolutely game changing, because it's quick and easy. You can see there, we've analysed the deal in less than a couple of minutes, and the numbers are going to tell us whether we should invest or not invest, or ultimately what offer we need to tweak it to make it work for us. So that's how it works. That's how BRR works. It's a hugely powerful strategy. I absolutely love it. It's been a game changer for me. It's added a lot of net wealth to my my portfolio, and we continue to push it hard. And there's many ways to fund the deals. You don't always have to be using bridging or mortgages. You can be using cash finance, JV, you know, finance angel investors. There's many ways to fund the deals, but ultimately, as long as you've got a good deal and it doesn't get much money sucked in, then you know, most people will back that deal if they're going to get a good return out of it, or they can see that the numbers are going to play out. So as always, if you want to continue with my journey, don't forget to subscribe. I'm pumping out information, try and get a video out there every day. But if you want to take things to the next level, if you want to get access to things like this deal analyzer, if you want to, you know, accelerate your results, join the mentor program. It's a 3-month crash course. You know, we go through absolutely everything, and I guarantee you will get deals. I guarantee you will change your financial position by being on that program. Head over to nextlevelpropertyinvesting.com and book a call with me. We can have a quick chat and make sure that we're a good fit for each other before you get started. Take care, everyone.